Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Monday, the 29th of March. It's the last trading week of March of 2021. It's about 8:02. The market's going to open up in about an hour and 28 minutes. I'm here to give you a preview of what to expect this week and give you some things to pay attention to. Now, looking at the global markets right now, not the global markets, looking at the U.S. futures markets, we're down. We're down about 20 points on the NASDAQ. We're down about 155 points on the Dow. Down, down, down. Now, let's look at the market from a technical perspective before we get into the nitty-gritty. And as you could see here, I don't know what I'm looking at. I don't know how we got this chart up here, but let's look at a normal chart. And let's put a moving average study on it. That's it. Here we go. As you can see here, we're now above the 50-day moving average. It looks like the S&P is huffing back above, is trying to make new highs. I would expect the resistance level to be right around the 403 level. However, if you look at the NASDAQ 100, you will see that it's still lagging behind the moving average. That's the 50-day moving average. We went a little bit down. Now we're going back up. Not sure if we're going to break it or not because momentum levels are through the roof. Now, they're coming off a little bit, but again, if you look at the overall stock market, and I mean the overall stock market, you will see that 83% of stocks are trading above the 200-day moving average, and 57 are trading above the 50-day moving average. These are all stocks that have been trading for 6 months that are over $2. But just wanted to give you a little shift of momentum level here. This is a 20-year chart, and this is where we're at right now. Just wanted to kind of show you, this is the overall stock market. We're stretched out. Look at that. This is a 20-year chart. This is 2003, this is 2009, and this is where we're at currently. So I'm expecting the market to cool off a little bit after this. Now, if you look at a short-term basis, it's the long-term. That's the 200-day moving average. If you look at the number of stocks trading above the 50-day moving average, the number is not as bad, but it still needs to decline. It looks like it needs to come down to the 40th, maybe 30th percentile before coming back up. So both the 50-day on a long-term basis is on the way down and the 200-day is on the way down. So that's not happiness. Now, let's talk about global events happening this week. We've got a lot of stuff. Energy shipping markets take center stage this week as the drama with the Suez Canal continues to play out, and OPEC meets over 2 days to discuss output targets. That's happening this week. As a matter of fact, we've got a petroleum status report on Wednesday that's actually going to be pretty important. Investors' events on tap this week is Kroger and Xpeng. They're going to be talking about their products and services, while Micron and Lululemon is set to report earnings. And we'll talk about those two earnings in a different video that I'll do maybe later today. It's probably a good time to do it. Talk about both Micron and Lululemon. Global chip shortage will impact deliveries from Tesla and NIO. Remember, a lot of these chips are used in autonomous self-driving and EV cars. And I warned you guys that there's a chip shortage and it's going to impact a lot of different brands, including Tesla and NIO. That's already being reported. That's something to pay attention to. Analysts expect Tesla to report about 162,000 deliveries for first quarter. That's down from 183,000, while NIO has already reduced its guidance to 19,500 from about 20,500. Nothing major. In D.C., President Biden is expected to unveil a multi-trillion-dollar infrastructure plan this week. Pay attention to Fed data, which we'll talk about in a second. In auto sale reports will be released by some automakers this week. TrueCar forecasts total new vehicle sales will soar 42% on adjusted basis in March. The monthly season's annual rate for total light vehicle sales is estimated to be at 16.4 million units, excluding fleet sales. The TrueCar expects U.S. retail deliveries of new cars and light trucks to increase 53% from a year ago and 10% from February. So keep your eye on auto sales this week. Now, this is important. Credit and debit card data suggests that the stimulus checks are boosting sales in certain retail categories. Get a piece of paper, write this down. A list of companies named by Cowen as a potential beneficiaries from stimulus spending includes Amazon, eBay, Starbucks, Boot Barn, ticker symbol BOOT, American Eagle Outfitters, Nike, Dick's Sporting Goods, which I'm really bullish on, and digital advertising platforms like Facebook, Google, Snap, Twitter are also expected to see more brand advertising aggressively to capture stimulus money. So that's what we need to pay attention to this week. In terms of Fed data, we've got consumer confidence. That's going to be really, really important. We've got the petroleum report, which is actually really important in light of this Suez, how do you pronounce it? The Suez Canal. So keep your eye on the petroleum report. Then we've got jobless claims, construction spending, PMI, ISM, a lot of manufacturing data. Thursday's going to be a big, big day for employment and jobless and Fed data. And then you have employment data on Friday. Now, the last jobless claim report was actually bullish. We went below 700,000, which was really huge. Now the consensus is, look at that, 699,000. The 4-week moving average is 736. Honestly, if we're below 700,000, I'll be really, really happy. And if we can go to 625,000, I'm just going to be downright giddy. Now, in terms of employment numbers, the employment situation got better as well. But I mean, look, we're all over the place. So a rise, 619,000 jump is expected for non-farm payroll, which would exceed the February's far high-end expectation of 379,000. But I guess we'll see, because look, the number's all over the place, from 439 to all the way to 1 million. So we'll have to see. But unemployment numbers, if we can see unemployment break below 6%, it would be very, 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 it would be good. And it would go a long ways towards solidifying the jobless claims, which is a weekly report. And we get this report from previous Friday. This is from 327, and today's only 329. That's why I'm very happy that we got 684,000. I think that's the first time we broke 700,000 in quite some time. Now, let's go into sentiment. Sentiment, very important, yes. I'm just having fun with you guys. In terms of the 10 major sectors in the S&P 500, you've got energy and financial, industrial material, real estate, look, technology, and consumer discretionary are still fragmented. You still have healthcare in between, which means we still have to keep an eye on the technology and the consumer discretionary sector. If you look at the semiconductors, they are doing really, really well, and I told you they would. As a matter of fact, semiconductors, ooh, look at that. Let me fix that for you here. We don't need to look at a 20-year chart. They look like they're now heading above the 50-day moving average. I would give it a couple of more days above, but I like semiconductors right now. In terms of the overall QQQ, we're still lagging behind. We haven't begun crossing the 50-day moving average. So as you could see, semiconductors are much stronger than the broad FANG stocks right now. So I would be very cautious with large cap FANG or large cap tech stocks right now. Looking at the S&P 500, let me show you where the money flow is. ADS. I told you about a week and a half, 2 weeks ago, the ADS would be heating up. Coach, Kohl's, energy. So you got retail, energy, and financial. That's what I would focus on as far as the S&P 500. Financial, energy, and retail. As far as the NASDAQ 100, I would focus on chip stocks. Look at that. And travel stocks. Applied material, chip stock, travel stocks, chip stock. You got some chip stocks and a minor interest in travel stocks. Stocks are actually moving lower, like Marriott. Expedia is still high, but I would focus mostly on chip stocks right now. Now, to give you some stocks that I'm looking at, let's look at 90-day pullbacks. Ugh, this is too weak. Don't like it. Let's look at some more pullbacks here. Here we go. We got some pullbacks. All right. As far as a 4x4 pullback, the only ones I like here are, I like British Tobacco, BTI. This one looks really good for a pullback. Intel actually is coming back up on my screen. So Intel is starting to make up. They got a new, I think a new president or a new CEO of the company. I like Sina. And I like all of these except SIBN. It's a little too steep. But I like SMCI. I do like that one. Super Microcomputers. I like British American Tobacco, I like Intel, and I like Cinna. So Intel is kosher, BTI is kosher, SMCI is kosher. Let me look at the longer term chart of this. Oh yeah, it's breaking out nicely. I want to make sure it's trading above last February's high right here, and it definitely is. So SMCI, SMCI Super Micro, BTI, British American Tobacco. Let's see. No, let's not, because it's not trading above last February's high. So let's scratch this out. Let's look at Intel. I haven't seen Intel in a while. Intel is also, it's coming back, but I would hold off. I want to make sure the stocks are trading above last February highs. So far, I like SMCI, and I don't like BTI because, as you could see here, it's lower, not higher. This is the last February peak, and this is where we're at now. And let's look at Cinna. Oh, yeah. So forget Intel, forget BTI, SMCI, and Cinna. Why? Look at where price is right now, and look at where it was last February. We were at 83, and we're now at 144. That's a good pullback. Pullback from the current high. Right here, the high is at 39. We're at 38. We went all the way to 36, shook some hands out, weak hands out. Now we're ready to go higher. SMCI and Cinna, Synoptics, again, look at where we're in February. Look at where we're at right now. Nice little pullback from all-time highs. As you could see here, we went to 144. We're at 136, went all the way to 123. So out of these stocks, I initially liked all of them, but once I started looking at all of them, SIBN, it's too steep, this pullback. British American Tobacco, still kind of struggling to break out above last February's high. Last February's, I mean 2020. Same thing with Intel. Could be a potential pick, but needs to break out a little higher. But Cinna and SMCI are ready to go. Those are good stocks right now. I would be buying above the recent swing high and putting a stop loss right here below the swing low. Buying right here above the high and putting a swing low stop here. And my profit target would be twice my risk. Now, before I let you go, I've got something important for you, something pertinent, something timely. Folks, there's a little known rule causing a glitch in the stock market. Now, whenever I hear about glitches in the stock market, to me, that spells opportunity. And those who can spot it, they have a chance to grab double, triple, even quadruple digit gains overnight. Imagine having a chance to grab double, triple, even quadruple gains overnight. And that's what happened with KNDI, ticker KNDI, when it saw a 2,340% gain. Can you imagine investing $100 and coming out with $2,340 on the other side? 2,340% gain on KNDI ticker symbol. That's mind-blowing. Wall Street legend and Forbes contributor Adam Sarhan, he's found the glitch and he's going to share it with you. Now, if somebody told me about a glitch in the stock market that could potentially give me quadruple, triple, and double-digit gains overnight, I'd be all over it. All you've got to do is follow the link below and get all the details. Remember, this is a Wall Street legend and a Forbes contributor. This guy has managed money for some of the wealthiest families on earth. Adam Sarhan, he's found the glitch and he's going to share it with you. What else can I say? Follow the link below and get all the details right now before it's too late. And make sure to like this video. Subscribe to this channel if you're watching on YouTube. And folks, stay ahead of the market by being the first to be notified when we post our next video. And have a great, great week ahead. And watch out for all of these pitfalls that I've talked about in the beginning of this video. You may want to rewatch this video more than once. I'll talk to you guys soon. Have a great day. Bye.